So let's talk about the intraday navigation system. As I said, it is nicknamed the INS. It's a collection of the best in potential support and resistance systems, all in one indicator for TradingView. So we principally use the TradingView platform. Uh, Good reasons for that. And I want to liken it to something. The reason it got its original name, INS, Intraday Navigation System, is I was just thinking a little about at that time the Navy's landing system on carriers for planes that were landing on the carrier, and they had something called the ILS, was an instrument landing system, and what that really was a set of Fresnel lens that had different angles on them. So as the pilot was coming down to the ship, if he was above the right glide path, he was looking at a light and it would float up. That light would actually float up above a center light. It was called the meatball. And if he was below the glide path, he'd see lights below, which tells him he has to come up some. And then there were right and left lights there, and you had what was called a landing signal officer that would direct you. But the bottom line is, at nighttime, in a storm, the pitch and yaw of the carrier, and you had that ILS system, it was easy to navigate down and touch down. Now, what you're seeing here, a little bit more modern, this is actually a HUD with heads-up display on a 737. And so now they have this all projected into a screen, and if you watch videos on this, you'll find it very interesting because he just broke below the cloud cover here. And so they just fly in based on that HUD, keeping it where it needs to be. And then when they get close to the ground, they'll see what's going on. The Navy is moving away from the meatball to something called Magic Carpet Ride. And it's also kind of a heads-up display. But the bottom line is they navigate down to, just a very few feet. Okay? They navigate down to just a very few feet. And that's where we got the INS system, because it can definitely give you some precise information which you can use independently or in conjunction with other things, which we'll talk about here. So let's talk a little bit about the INS, and then we'll just go to the charts and then put it on there, and we'll call it a night. Now, there are other elements to indicators that I'm giving out, and I will post them over the next week. And so by the time we get to next Wednesday's session, we will definitely be all up on all of the indicators that I'm making available. This is the most significant because you can use this right now with your trading, and that's powerful. So one of the reasons why we have an intraday system is because a lot of times, educators or traders, because their old paradigm, will start off with 4-hour, even 1-hour support and resistance zones, supply and demand zones. And they'll essentially, just do that visually. They'll look at the chart, and where there's commonality between, upswing, where there's commonality between support and resistance, they will block off zones on those charts, typically zones. And depending on what time frame you're on, they could be rather substantial. Again, that's because it's old paradigm. They don't mind trading with 50, 100, 150 pip stop losses. Okay? So that's not sufficient for intraday, because you can have 30-minute trades, 15-minute trades that cycle a 30-minute trade up, a 30-minute trade down, a 30-minute trade up, a 30-minute trade down, all inside those 4-hour support and resistance zones. So it's nice if you're doing 4-hour trading. If you're doing on 1-hour chart, hey, it's nice that you have some 1-hour support and resistance zones. They're not going to suffice for 15-minute, sometimes 30, and even less. So if you're trading the 15-minute scan like we are, a lot of those 1-hour, 4-hour markups, support and resistance, are not that useful to us. Okay? Yeah, the magic carpet ride for the Navy's. I know they've tried it out on the 22, and I think they've looked at it on the 35. And they're definitely hands free until the last second, and so they let the pilot do other things like fly the plane to that point. And it's gotten so computerized and mechanized and much more accurate that it brings in safety, and the training on it is a lot less as well. It's gotten to the point now that even an Air Force guy could land on a Navy ship. So, in terms of support and resistance, in a lower term, like 15-minute, you can do the same kind of support and resistance that the guys do on the 1 hour, 4 hour, in the sense of just look for visual clues. You want those zones to be a lot tighter than 50 and 75 pips, though. All right. So you can do visual turns, but here's the problem with intraday. And there's just certain things on the chart you don't have to understand why, it just is. Okay? Fibonacci is one of those things. Charts are laden with Fibonacci. Fibonacci absolutely rules the charts, and you're going to see this 2 weeks from tonight. And in ways you've never dreamed. I guarantee, I don't care if you've been trading 3 years, I'm going to show you about Fibonacci that you've never seen. And you're going to have a chance at getting the hidden numbers that nobody else knows about to populate your Fibonacci tools. So visual turns, reversals, if you will, support and resistance, if you will, can be drawn on 15-minute charts. The trouble is where you are in the trading day, okay, and projecting forward with that. So what I mean by that is intraday support and resistance has a funny way of working in 24-hour cycles. That doesn't mean that's it, but you'll see it over time. It has an interesting way of working in 24-hour cycles. And in those 24-hour cycles, support and resistance turns over to other support and resistance. And so what ends up happening over the years is people have sensed that, so people have created systems to look at that 24-hour cycle and look at the range in that cycle. So it's called the daily range. And so they'll take things like the open, high, low, close, and there's various formulas. So things like pivots, things like Camarilla lines, things like Fibo pivots are all based on yesterday's trading range. And so what was actually support and resistance on your chart yesterday, meaning before 1700 New York, what was on your chart yesterday may not provide support and resistance today. So going to a chart and manually drawing support and resistance zones, at a lower level time frame, 15-minute, 30-minute and below, it's going to only be so valid. I'm not saying there won't be hits. Don't mistake me out of context. I'm just saying you'll get a lot more hits if you operate off the daily range from yesterday and massage it for today in order to project future support and resistance. So the problem with trying to do it manually is you have to really be aware of where you are during the day, and that generally at 1700 support and resistance flips over on an intraday basis, which is kind of an interesting fact. So you can't just apply the same technique you do at 4 hours. You have to look at it in a tighter perspective. So there you have it. Visual turns are okay, but they can lack. And they lack because much of intraday potential support and resistance is based on the previous day's trading range. So we do use 1700 as the daily close. The market closes at 5 p.m. Eastern on Friday and opens at 5 p.m. Eastern on Sunday. And while it's open all week long, for calculation purposes, the market's deemed to close at 1700, not midnight. So a day is measured in the 24-hour span between 1700 New York to 1700 New York the next day. Range-based potential support and resistance, I got an extra R in there. Range-based potential support and resistance is only good for 1700 forward. So we'll talk about that on the charts. But just understand, if I'm going to put a line on the chart and it's based on a formula based on yesterday's open, high, low, close, it's only good after 1700 today, because that's the support and resistance for today on the intraday basis. Okay, so it's only good. Don't realize the lines will go backwards from the current time, and you will get hits off of them, just like you can do a Fibonacci. And if you extend the lines all the way across the chart in both directions, you will get hits in the past off that Fibonacci you draw for a particular swing, and you're getting hits in the past that occurred before that swing occurred. So you will get hits in the past, i.e. before 1700, on today's support and resistance. Again, that'll make a little bit more sense when we talk about it on the charts. So the INS is really a compilation of several support and resistance systems. Now, since I started coaching and we had teams, so we're almost 14 years plus, I don't have an emotional attachment to the INS, okay? But what we've done year after year after year is we've tracked various support and resistance systems that are out there. I mean, so many I can't even name them all. And what we look for is which ones worked. Not, I got a hit on it once every 3 months, but which ones routinely, day in, day out, were working for us. And the ones that were better performers, we kept, and the ones that were lagging, we got rid of. A good case is we used pivots for several years. And then, since I was such a Fibonacci fan, I started looking and I found the formulas for Fibonacci-based pivots. And we put those on our charts, different color, ran them against regular pivots, and we got about 40% more turns for reversals. And almost 90% of the Fibonacci-based hits were repeated on the, almost 90% of the standard pivot hits were repeated and covered by the Fibonacci pivots. But there were Fibonacci pivots in large numbers that standard pivots didn't get. So it's like, I don't need all these lines on my chart. I'm going to take the one that's a better performer. So we dropped pivots and we went to Fibo-based pivots because they're more accurate and you get more hits off of them. So this is a system that's been developed over the years. We've added, we've deleted, we've modified, and it's held pretty much the same for about the last 5 to 7 years. Haven't found anything worthy of adding to it over what we already have. Now again, I have some other support and resistance systems to give you outside of the INS. One of them is called shadow bands, and you're going to get that and some training on that as well. But in terms of just standard horizontal support and resistance, in my opinion, we have it covered. All right. Now, excluding Fibonacci. So it's multiple support and resistance systems. So compliance is significant. The compliance is something that I use a lot in Fibonacci. So if I draw a Fibonacci on a particular swing, and we have standard levels 14.6, 23.6, 38.2, 50, 61.8, 74.6, etc. If I draw that swing or that Fibo and I get 4 hits to the pip on some of those levels, then as price moves along that Fibonacci, I have a higher level of confidence when I start to see a bounce that it might be a bounce. So we call that compliance. The Fibonacci we drew is price is highly compliant, kind of controlled by that Fibonacci. So it's a term we use to talk about the frequency of hits with that particular mechanism. Now, we can do the same thing with support and resistance and our INS. And again, I can't explain this because I haven't studied it enough, because I don't want to, quite frankly. It's one of those things that it works and you pay attention to it, and when it doesn't work, you don't worry about it, and you don't need to take it farther than that. It's not worthy of thousands of hours of study. So what I mean is compliance is significant here. We have several systems in here. So we got 5 or 6 support and resistance systems in the support and resistance in the INS. And so what you'll notice, let's just pick Fibbo pivots because I've already mentioned it. There will be some days where the Fibbo pivots just totally rule price movement. There'll be 3, 4 to the pip touches on the Fibbo pivots where price turns. And then the next day, it won't have a single hit. But the next day, our Camarilla system will have 3 hits. So as you sit down to the charts, you just rotate through the various support and resistance systems to see who's hot that day. Okay? To see who's hot that day. 1 or 2 or 3. They may all be having hits. Maybe one isn't the dominant support and resistance system that day. But very often there will be one. And again, I don't have a good reason for why some days it's just, you're so amazed. It's like when you do Fibonacci or pitchforks and, you know, you do a fork Fibbo and here's this perfect intersection with a warning line and a 1618 or a 2618 fork Fibbo to the pip, and the candle comes up with a big wick and hits it and retreats and moves 200 pips, and you go, we call that chart woo-woo. When there's only one candle that can hit that intersection and it's at a strong Fibbo like 2618 and it's intersecting the pitchfork's warning line and then it bounces for 200 pips. So there's some things that you just accept as woo-woo, if you will, and compliance and the randomness of compliance is one of those things. Now, somebody wants to invest a couple thousand hours and trying to figure out why, I'll give you a few hints and you'll be on your own. So, one of the things that exist in the Fibonacci world, and this is what harmonic scans are based on. You have to understand that you've got algorithms that are searching for every swing. They're measuring. And when they get one of those swings that is a retracement at a certain level, there might be 5 different patterns that match that. But it's the adjacent Fibonacci or the adjacent ratio that narrows it down. It's okay, now we're down to maybe it's 2 patterns. And then finally we go down to C and C sets, and now we have the third element we need. Now it's this particular pattern, and we can project out to the D, all based on Carney's work on Fibonacci and ratios associated with those scans. So what makes that scan D point very hot is there's clusters of Fibonacci's that are all residing in a tight zone. So, Carney calls that the PRZ, the potential reversal zone. So the same thing happens with various S&R systems, which is really cool. So if I put Camarilla lines on my chart and a couple of those lines land to the pip on top of my Fibbo pivots, you bet I'm going to note those lines. So you can have clusters. You can have clusters of support and resistance that sit on top of each other or within a pip. 2 lines within a pip would be just considered the same as on top of each other. Or you can have a little tiny zone. We used to, to try and be different than Carney because we weren't using scans. We called them HPRs. So an HPR was a high probability reversal. And that would occur in a zone, so it was an HPR zone, where you might have 2 or 3 support and resistance systems having a line, and they're all within 2 to 3 pips of each other. Again, close enough for what we're doing. Because we can establish that little 2 pip, 3 pip zone, put a stop loss on the other side of it, and be looking for a bounce in there. And if we get that bounce, we're good to go. Now, so clusters between the systems are even cooler. And it's a process, I go through once 1700 is flipped over and I've got the new lines on my chart, because they'll update themselves automatically. Even before I have anything to measure with support and resistance. Support and resistance is a little bit, because the dynamics are how a lot of it turns over at 1700. Support and resistance is a little bit like, that brand new pitchfork where you can see, because you're projecting out, where those potential support and resistances are. And so as 1700 comes and it's 1702, 1705, if you're around your computer. Anyway, first time you get to your computer after the end of the day, or day's end, if you will, the daily close, you can match up those things even without any data points because you're just matching lines. Right, you're just matching lines. And so you'll put particular emphasis with that. INS is great for energy points to create a best fit pitchfork slope and angle. In the exact same way that you use Fibonacci's not to trade, but to help set the angle of a pitchfork, if you have an angled pitchfork and you have Fibonacci's turned on and they intersect a component of the INS, that's an energy point. And so you can use those energy points to help set your fork, which is kind of cool. Need to go through the course if you don't know what an energy point is, so that's okay. An energy point is the intersection of a horizontal line and a diagonal line. There's only one candle that can touch that point. Unlike horizontal support or resistance where 20 candles can touch it time after time after time, and you may not know when to trust that horizontal line. When you have a horizontal line, like straight Fibonacci or like horizontal INS, horizontal support and resistance, and it's bisected or intersected by a pitchfork, an angled pitchfork, the lines of a pitchfork, that creates an energy point. It could also be two diagonal lines, two pitchforks intersecting each other, where there's lines touched, that is an energy point. Energy points are the strongest support and resistance on a chart. One, because only a single candle can hit it, and it's almost always a huge impulsive move out of there. Strong moves, little retrace. They're the best moves you'll see as a trader. So INS is also totally great for energy points outside the fork. Okay, so Fibonacci's. If I have fork Fibonacci's that are external, if I have warning lines outside my fork and they intersect a support and resistance system, you might be finding a trade. Yeah, X marks the spot. That's a good way of saying it. So channel retrace or external fork, angled projections, and extended retracements. So typically we call those fork fibos. So a fibo that's based on the swing of the pitchfork we're using. When price leaves the swing high or swing low horizontal, we have the ability to project upwards past 100, 127.2, 138.2, 161.8, etc. Or it retraces below 100%. We call those an extended retracements. So projections, extended retracements, all fork fibos. INS lines are good for those as well. Any questions on any of that? Nope, don't need higher time frames to trade on lower time frames. Absolutely not. You can if you want, but not necessary. That has to do with wave structure and waveology. It's the other way around. If you're taking a larger time frame trade, you'd want to get confirmation by lower time frames. But lower time frames, if I'm trading 15-minute waves, I'm not going to be biased by what the 4 hour is doing. It's indifferent to me. The trend does not matter at the upper levels when you're trading lower level. I can explain that with multiple time frame analysis, and we'll probably do some sessions down the road on that. We've, all of our optional traders with harmonic wave convergence and tab 29, that's exclusively what they trade is multiple time frame analysis, all in one indicator, all on one chart. So they can see where the wave exhaustion points are for all time periods. So TradingView and our INS indicator formatting. This means you have the ability to adjust color, but there's a few things about that, just like we kind of try and have some standards for certain things in our Scans, Forks, and Fibos group for community purposes. It's not about what you like, but if you're participating in community, realize this. We've got 10, whatever, admin coaches in our group, and we look at hundreds and hundreds of postings a day in the Scans, Forks, and Fibos group. And if we have to decipher each person's chart, it makes our job harder. And when you make our job harder, we tend to want to stay away from it. We're humans, And so if you can help us help you by staying with our color standards. So there are colors that are defaulted in the indicators. You can change them. And the only asterisk I would put on when you change them is, and I'll get to it in 1 second. So you could turn last price on, but if you have a calculated point, its line is on the chart all day long and it doesn't move. And so, why you would really need last price, I'm not sure, but, whatever. We're chartists. As chartists, we trade technical off the chart. So more of that's visual with what we do. Okay. So last price as something that you turn on the chart. If you want to do it, you can. But the more important thing is the indicator labels. So if you go and change the color of any of the INS components out of their default, we're going to ask you to turn on your indicator labels. You might like them there anyway. And I'll show you those on the charts here in just a second. We're going to put it on, but it's not going to be that useful because we're only 4 hours into the new day. So we'll see what's happened. But it's better to do a class like this at 3 p.m. Eastern when we've had 22, 23 hours and you can see how the INS systems work. We're going to go to live charts here in just a second. So, how do you get these on your charts? Now, don't be doing this while I'm teaching you. Because I'll tell you what, I'll tell you how grizzly I'll get. If somebody comes back with a question that I've just taught and you were too busy trying to set up your charts while I'm talking and you ask me a question, I'll just shut the session down. I have no problem doing it. Because I'm not here to waste time, mine or others. So don't try and do this now. You could take a screenshot of this page if that'll help you later on. But it's pretty simplistic if you've already been using TradingView. So in 1, you have a chart open. 1, go click on the indicators tab at the top of your chart. It's going to bring up this gray panel. When you do, go over and click on Public Library. These are indicators that higher end traders have put in here for your use. 3, go to the search box and type PC space hyphen. PC space hyphen. And you'll get the library of stuff we have out there right now. 4, click on PC-INS PSR. Intraday navigation, potential support and resistance. So you click on that. It will then show up here in the upper left-hand corner of your chart, just like any other indicator would. So it's pretty simple. Once again, on your TradingView chart, indicators, 2, public library, 3, type in PC space dash or space hyphen, whatever you want to call that. 4, it'll show up in the roster of PC dash indicators. That's for Pip Club. And you select INSPR. It is not locked. It's available, as you can see. And when you click it here, it'll put it on your chart. And then you can close this panel out. And now it's on your chart and you're ready to roll. Okay. Now, one comment about TradingView charts. You might have seen Zoe make a comment today because Zoe's been with me, I don't know, 5, 6 years. Zoe and Glenn. I can't believe you're giving that away. there is a lot of programming in these indicators. And I'm not a programmer, I'm a trader. And programming costs money. So I can either charge for indicators, or I could give them away and say, look, if you're going to get TradingView charts, go to Scans, Forks, and Fibos in the pinned post and use those links to go to TradingView. Don't go to TradingView on your own. Once you do, it's done. I'm cut off. But if you use our links to get there, we get a wee little leprechaun comes around with 50 cents and throws it at me. Okay? But that little 50 cents adds up, and that's how we can program stuff and give it to you free. So using our links doesn't cost you any more, but you get the benefits of us turning around things like these kinds of gifts. So use the Scans, Forks, and Fibos group link to TradingView. Hey, I'm not going to track it. You don't have to. You can go tonight and go get TradingView charts, sign up for their trial, 30 days free. Cut me out totally. But it shows up over time, so the people that support what we do a little allows us to support. And I'm telling you, the stuff we have coming, it's going to blow you away. Now, once you have this on your chart, it's a typical TradingView indicator, which means the second toggle or the second tab or whatever you want to call it, icon in the indicator is the format button. Now, for the INS system, when you click on that format button, it's going to look like this. Not quite so big. It's not going to have my picture or the TradingView logo, but the panel will look like this on your charts. So here we have the 5 key elements of the INS. These are all potential support and resistance systems. First one's called harmonic targets. Now, I'm not going to explain them today because I'm going to explain them in the Fibonacci class. They are some woo-woo based reality in the charts. And when I show you how they're built and how accurate they are, you're going to be pretty cool. Now, the interesting thing about harmonic targets, like I said, there will be days where they are just spot on and price is so compliant with them, it'll just amaze you. There are other days where a price goes through it like a hot knife through butter. The nice thing about our targets is we don't do entry orders, so we only do setups using our support and resistance systems. So if price goes through our targets or through our support and resistance, it's no matter to us. The second one is Camarilla lines. We have an interesting implementation of them. They're on some charting packages, but not TradingView as a built-in. And so we've been using Camarilla lines now over 10 years. And they too, harmonic targets are not based on the trading range. It's based on something totally different that's Fibonacci based. Camarilla line, the rest of the lines, the 2, 3, 4, and 5, are all based on yesterday's open, high, low, close, and various formulas applied against them, kinda. So Camarilla lines are a real good range-based system, and there's just some interesting reality about them. There's a particular number, the H3 and the L3. H3 is when it tags it and pulls back, that's a go short because it's reversing. Down below the L3, which is the low or the bottom, when it hits that L3, it's go long, and it's reversing there. And you'll just see days where, nothing's touching the Camarilla lines, then all of a sudden you'll see it bounce off H3. You better watch that L3 because there's probably a 50% chance it's going to bounce off the L3 on the bottom. So they're an interesting beast, and again, there's compliant some days and some days they're not. The DC45, I don't know, this is probably one of the things Zoe doesn't want me telling you. So the DC45 is pretty cool. I was at a broker-sponsored conference with about 3,000 traders, big, the presenters there, the breakout sessions there were for presenters with, 1,500 people in a room. And some really cool people. And so there were some high-end sessions there, and I went to some, and, just sitting at the table next to me was this guy. Ends up he was an institutional trader. And just kind of like, yuck, yuck. I'm like, okay, give me the inside scoop. And he kind of laughed. He said, well, there is one thing I can tell you. And I said, what's that? He said, every day, in every currency pair, there's a move that the price is going to do. And it's either going to move 45 pips up after the daily close or 45 pips down after the daily close. And tag those lines. Sometimes it reverses them. Sometimes it's just a nice directional thing. But nobody in the Forex world knows this. It's a secret for institutional traders. You're not go search up 45 pips after daily close. You aren't going to find it. It's not out there. And in a world where, we're in a zero-sum world, guys. So in a world where we actually compete against each other, me giving away secrets is not a good thing for me, huh? So, yeah, So the DC45 is cool. It's only 2 lines, but it's fun to watch the interaction with that. You watch that for 6 months, and it's going to blow you away. And to think, 99.9999999% of the traders to your left and right don't know anything about it. So it's a pretty cool little mechanism. Fibbo pivots. As I said, we traded pivots for years, and we compared Fibbo pivots to them, and Fibbo pivots just smoke regular pivots. So it's like, why be the JV team when you could play varsity? So Fibbo pivots are one of the subcomponent S&R systems in the INS. And lastly, the DP30. So this is something that I came up with through just sheer observation over the years. And that is this. That again, it's based on a daily close and in 30 pip ranges from that daily close. And so again, there's no rhyme or reason. I just noticed it after trading thousands of trades that frequently I saw it in proximity to the daily close. I started measuring it, and lo and behold, it was in 30 pip stretches. So again, you're probably not going to find the DP30 system out there in any place other than here from me and from these indicators that you can have. Now I want to remind you, this is not a support and resistance training session. It's a training session on the INS. But I will tell you something or remind you that one of our traders reminded us the other day through his observations. And I've talked about this. It's just I haven't made a big strong point of it over the years. And there's something called psychological barriers that are typically strong support and resistance. And again, this is for all currency pairs. And those psychological barriers are double zeros and 50s. So like the euro, at 122.0000. The euro at 122.0050. So the double zeros and the 5 zeros are called psychological barriers, and you will very often see price turn on them. So just a little tidbit for your knowledge base. So one of the things that I want to make clear here is, as you've seen the evolution, I joke with my traders about if I gave you the full 50,000 page PDF for trading, you'd probably be overwhelmed and quit. But you've got to assume that you're going to assimilate that knowledge as the years move forward. You're never going to stop learning as a trader. If you think you're going to arrive someday as a full-blown trader, guess again. As I said, I've been at it 15 years, and there's stuff I learn every month. So it's just a huge universe to learn from. I'm not saying it's going to take you 15 years to trade live. I'm not saying it's going to take you 3 years to trade live. I'm just saying you're never going to stop learning. It's the same thing with self-development. Oh, I read that book once. Yeah, well, can you repeat it to me? Can you tell me the 5 key points from it? So you always will continue to learn self-development, personal growth. You're always going to continue to learn trading and trading techniques. So one of the things that we do when I taught pitchforks is you go to the course and you go straight through and you start creating pitchforks. Draw them in the group, traditional, best fits. Got to use our group because you're not going to guess right. You're going to learn by learning what not to do. And so, first of all, you have to have some discipline to put your ego on the shelf to post a pitchfork trade, all right, or a pitchfork setup. And, you know, look, I'll tell you this, probably 50%, I don't know, Zoe, I don't know who's here tonight, Theo, Tim, you know, maybe 50% of the first pitchfork you draw will be upside down or backwards, all right? It just happens, and that's part of your RAS. We'll talk about that next week. But I move you through a progression of pitchforks. And how do I trade this? How do I trade this? You're not ready yet. So I have you looking at it. Now, some people, because we've married it with Quickfire and we have Charlie Delta, there are some people trading it. But here's the deal. I've said many times, because I've got a group that's moved through here over the last, 6 months plus. And what I tell them is two things with pitchforks. I don't take a pitchfork trade unless it's an energy point. It's got to be something really special other if it's not an energy point. It doesn't mean it's not tempting to try and take, but that's selectivity. They've also heard me say, I only take trades I'm going to win. And that's not a point of arrogance. That just says I have a highly evolved selectivity. That I know trades that are lottery ticket trades. Those are the trades that you take and you're kind of saying to yourself, I hope this one goes. Those are lottery ticket trades. And it's just like a lottery ticket scratcher or a lottery scratcher ticket where, a $5 scratcher, and about every seventh ticket, they let you win $5 or a free ticket. Hey, man, I got $5 on the lottery. Hey, I won today. Woo! You don't talk about the 6 days you lost, right? So that's a lottery ticket trade, and it'll affect your mind in the same way. Lose, 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 lose. Oh, I got 12 pips. Hey, man, I got a 12-pip trade off that. And it was a big question mark whether you should have ever taken the trade. See, if you don't know what you're doing, don't take the trade. Pretty simple. No guessing. It's the worst thing you can do. Oh, well, it's just a demo account. Guess what? It's programming your brain. Your brain doesn't know the difference between demo and live. Not when you think you're trying to take a trade. If you've programmed yourself to say, I'm going to demo trade to learn, I'm not worried about winning, that doesn't take place. The problem is when you're trying to trade demo, thinking, even as a greener trader, as a newer trader, and let me try this, let me try that, because you're trying to win. That's programming your brain. And it's hurting you more than it's helping you. So you want to learn how to learn. We're going to talk about that next week. So the INS is horizontal support. When is a horizontal support or resistance trade suitable to take? A, if it's an energy point with a pitchfork or a trend line. Pitchforks are just sets of trend lines. That the actual original name was a median line, and Andrews put two lines parallel to it at the swing, and they were called median sets. And a lot of the old fart pitchfork traders in the various markets still call them median sets. They weren't called pitchforks until some of his students looked at it and said, hey, Dr. Andrews, that looks like a pitchfork. Ha ha. Well, he still calls them medium sets, right? They were called medium sets from him. So one area that you can take a INS trade is with a pitchfork energy point. Another place you can take an a horizontal support and resistance is what? I've already told you. When it's a cluster. Little higher value if the support and resistance line sits on top of a Fibonacci. Right? So don't want to take them by themselves because there's too much there. There's too many of them. So you have to figure out which ones you want to use. All right. So let's go straight to the chart. And we'll look at our, this is Euro USD. This is a 15-minute chart. First thing I want to bring your attention to, oops. Yeah. Ah. Only in a demo. So my pen tool is not wanting to work right now. Give me a break. Give me 1 second. I gotta flush it out of my task manager. You having fun yet? It's saying it's available, so we'll see. Alright, let's see if it can work for me this time. Yep, it is. So the first thing I want to bring your attention to is the yellow line on the right side of your chart, 1700. So when we put support and resistance on the chart that's based on yesterday's open, high, low, close, we're talking about data that was there as the open, there as the high for the day. The low for the day is essentially right before we closed at 1500. So open, high, low, low, and close, same area. So today's support and resistance is going to be based on that, which means it's only good for what? Everything after this line. Now, you may see hits in the past, but don't let them confuse you, because sometimes people put support and resistance on the chart and go, oh, look, I got all these hits over here. Oh, the Camarillo's hot. Day ends. You draw a new line. The new lines will draw for you here, and you may see some hits in the past. That's cool when that happens, and it means a lot of things, but it's not support and resistance in the past, even if you see it line up. That's just the same way Fibonacci can have compliance before the swing that has the Fibonacci in it, which is kind of spooky. You know, again, we call that chart woo-woo. So let's just go over what the slides just did. We're going to go up here to indicators. We're going to click on public library. I'm going to go here to PC space hyphen. We're going to come down here and click on PC INS PSR. It's not locked. You're going to see it loading up here. I can get rid of this panel now. And we have the full complement of INS on the charts. So what we would typically do, so just like TradingView, all the indicators you have on TradingView, the first toggle or the first icon is an on-off. So we can hide everything by just clicking that once. Everything's gone. What I typically like to do is hit the charts if I'm looking at a 30-minute chart or a 15-minute chart, depending on how I'm trading. So it's all about lifestyle, what models you're trading, what systems you're trading, etc. So you'll come in and I will turn on the panel by hitting the format button. And there's the panel. I told you the one I had in the slide was a little bit bigger. So these are smaller. So you see we have them all turned on right now. So you could toggle them off or on. I'm just going to turn all of them off except the first one, harmonic target. Should be nothing but red on the chart. So this is for price action coming down. This is the only one that is not based on a daily range from the previous day. It's based on something. We'll talk about it next week. But you can use them. When they're red, it generally means price is coming down. When they're green, it generally means price is going up. So when they're coming down, they serve as support. When they go up, they serve as resistance. Okay? So next, I'm going to put the Camarillo lines on there. And there are these purple things. Well, first thing you'll notice is what? I've got a double hit. I've got a Camarilla line sitting right on top of one of my harmonic targets. We want to watch that. So I would probably draw a heavy line there. You know, the nice thing that TradingView added to its line tools is you can put text on them now. And so you could do something like this. You go over here to your line tool, grab horizontal line. So you come here, real hard to do, click it right on top of that. Yeah, let me pick it, yeah. I can color it whatever I'm comfortable in coloring, but there is a format and there's a text box. So I can say cam plus harmonic. Just, we call them HTs, harmonic target. Bingo. So when I eventually take off, if I want to take off my support and resistance system, I've got this line here that's good from 1700 today to 1700 tomorrow. That's a double line. That's a cluster. That's two on top of each other. That's a pretty strong support and resistance line. You with me? Pretty cool how we do that, right? There's no wave exhaustion. There's no waves being discussed here, Liberty. This is purely price and price movement and ranges of price movement based on formulas. There's no waves involved in any of this. So no other overlaps. Want to look at our scale here. We got a 5 pip scale. So I do want to be aware of things, you know, that are within 2 or 3 pips as I move forward. I'll come back and look at this a second time. You know, we got a harmonic target that is 1 pip away, 2 pips away from a cam line. So that would, maybe you want to make a little zone, but it's only a 2 pip zone, so that's pretty cool. All right. Let's go ahead and add our DC 45. Wait a second. Okay. So where you'll see that, so let me turn off the other two for a second. I'll turn off all the others. Look at that. I couldn't have asked for something more interesting. So here's the daily close. Here is your Camarilla and harmonic target, and your DC 45 at the bottom is sitting on top of it. Yeah, Tim, that's pretty cool. There's 3 lines there. No, there's not. My bad. I got excited. My bad. Take that back. It's just the cam and the harmonic target. Had to move the chart up some. But nonetheless, you see the DC 45. And what's going to happen is at some point it's going to hit this line, or it's going to come down and hit this line. Here's your daily close. So 45 up or 45 down. All right, let's go back. So we had targets, we had cam lines, we have the DC 45. So let's go ahead and put on Fibo pivots. And let's look for overlaps. So something is overlapping. Give it a second to flash. The DC45 has to recalculate every time. So look at the scale. 2115, 2120. So in a 3-pip zone, we have 3 lines. This is a double line. Okay, when they turn gray like that, it's a line sitting on top of each other. So that looks like, let's turn it off. You see that gray go away. So it's a cam line and a Fibbo pivot. So once again, I would get my line tool. Oh, didn't mean to do that. Where was that? Oh, right here. So 121.67. So I'm going to put a line there. And we're going to label that one, just so we know. So what did we say? Fibbo. You can make your own abbreviations. I don't care. As long as you know what they are. Fibbo and cam. Oh my God, Steve, this is too much work. Go flip real estate. All right. So we got a Fibbo cam line there. Anything else? A whole bunch of lines up here. 2504 to 07, starting to spread out a little, but I would still call that a pretty hot zone. It's only about 3 pips wide. So we got a couple hot zones. I'm not going to label them for now. Let's just put the last one on here. And then I'll tell you how you can use this above and beyond what I've already showed you. So we're going to put the DP30 system on here. Trying to keep my eyes going. So it's also this darker purple. You can see why price is holding up in here. We got a little bit of a zone. Again, this is really more fun to look at as the day goes on. So first of all, you know, you want to look back at some of this stuff. So we talked about everything is relevant for 4 of the 5 support and resistance systems from 5 o'clock on, 1700 on. We talked about there can be sometimes some back, you know, that's half a pip away. So this fact that we've got a Fibbo pivot line and a Camarilla line sitting on top of each other, very often what happens with these clusters is something happened in the past and that line is hot and the woo-woo says going to take all this. See, remember how this line gets formed. It's part of a formula that looked at the high, the low, open, close of yesterday, puts it through its formula, and that's how it draws these lines. So there was a candle over here somewhere that created the high that when you put it through the formula, it made this line shine up. And I'll bet you'll see in the past and in the future, because it's a double line, you might see something significant there. I'm just going to watch that line. Okay, it's significant. What's the third one down here? Did anybody see when that happened? Is that a Fibbo pivot? So fun to play. It's just like I said, people are like, oh, such work. And I'm like, I enjoy this. The only ones that are green are the Fibbo pivots. Yeah. So there you go. So we're just going to go and edit this line. Now it's 3. Oh my gosh. That you're going to see some interaction off that price point at some point. Oh wait. Camarilla. Cam. So there's one system. Harmonic target. There's another system. And Fibbo pivot. That's a hot line going for tomorrow. That's a hot line. 121.39. Well, I don't know what a strong trend is. You talking about a trend during this time period or a trend on an upper level? This time period or an upper level? So these support and resistance systems are no different than any support and resistance that on a chart for any time period. In other words, let's say, you went and did, let's say this was a 4-hour chart. I'll try and make it look a little bit more like a 4-hour chart. No, I don't know what I just did. Oh. Let's try and make this look like a 4-hour chart. I just spread them out a little more depth. And I'm going to come in here, and my trading guru has created some zones for me on the chart to show me support and resistance. And I don't have a opacity maker here, so you just have to bear with me. So based on previous work, he called that a zone, and he called that a zone because it had good touches, support and resistance. And maybe he called that a zone. And so here's my point to the trend in terms of the support and resistance. What the hell? Where was the support? It blew right through it. If you were sitting there with an entry order on that support zone, you got stopped out, my friend. But wait a second, it had 5 hits over the last 2 weeks on my 4-hour chart. Hey, it just blew through it. I don't care what it did last week. See, that's why every one of these lines, when you understand what support and resistance really is, that's why I label it PSR. It's only potential support and resistance. And you can't tell me which times it's going to stop it and which times it's going to go through it. If you can, we need to hook up. I'll fly you out and we'll spend some time together. Hey, support and resistance line. Blew right through it, no problem. But it stopped it here. Down here. Oh, it bounced it, but blew right through it. Doesn't matter what the trend is. Support and resistance is potential support and resistance. It's not a game where you say, oh, there's a PSR. I'm going to take a trade there. No, you're not. You need something else to identify a trade. Trends don't matter. Period. You'll see the web analyzer very frequently, on this downtrend, give you a buy signal here. You've got a prevailing downtrend, and sometimes you'll get a sell signal here. You got to remember what it is you're trading. Maybe that was a 5-minute web analyzer call or a 15-minute web analyzer call for a buy. It's against the trend. See, the thing is, old school, old paradigm, the trend is your friend. It's such BS. I'm not going to get tangent on that. It's another class. But just trust me. Upper level trends, no. Because all you have to do is understand a little bit about Elliott Wave. Depends on what I'm trading. I can have an upper level trend doing its kind of Elliott wave thing. Should be a little deeper. So we have an upward trend. We're going from a level above us, maybe 60-minute, 4-hour chart. We're going from the 2 to 3 wave in Elliott wave for the 4-hour. And yet here I am on 30-minute with a 1, 2, 3, 4. You know, at the 4-hour level, this could be a 75 pip pullback. I guarantee you, if I have a support and resistance hit here and a pitchfork hit there, I'm taking that sell because I'm not out to get this big move. I just want to get 10 or 5 pips. 5 pips. If you guys haven't watched the last session we did, minutes, right? Got to wrap this up. $5 pips a day on a 5K account with a 2% into a 10 pip stop loss, which is at the high side of what we do as far as the stop loss. That's $2.4 million. $2.4 million in 24 months. The only reason people want to go for the big pips is because they're so used to trading the old paradigm, because they have big fat stop loss and they have to make big pips so they can make something out of it. Because the stop loss is what? For those of you who aren't familiar with what we do in here, the stop loss is what in a trade? What is the stop loss? Come on, give it to me. It's the profit regulator. It's the profit rate. It determines how much money you're making per pip in that trade. And I'm not talking about different levels of capitalization or different levels of risk. Same capitalization, same downside risk in the trade. When you trade with a small stop loss, you don't have to make big pips. So if I have a trade opportunity to trade against a trend, see, here's the thing. And again, I didn't want to get deep on Elliott wave. I've done this once or twice. We'll do a whole Elliott wave class here. But you have to understand something. The trend is measured at a time period. So if we're looking at the trend for the green wave, and that's a green 4-hour wave, this 1 to 2 move of that trade is going to be at that level. It's going to be an A, B, C at the 4-hour level. Well, guess what? At the 15-minute level, that A move is an impulsive move. That trend is down at the 15-minute level. And in fact, that has a 1, 2, 3, 4, 5, which is an impulsive move. Safest move you can ever trade is an impulsive move. So it depends on what time period you're trading. Upper level waves going up mean jack to me. Because I'm not going after 150 pips. And I'm not going to give up 75 pips or an easy in the pocket 5, 10, 20 pip trade because, oh, the trend is up. And as I showed you, sometimes trends will be stopped by support and resistance, and sometimes they're not. So what are you going to do? All right, so this is typically what I do if I have some sort of target. Okay, let's say, and again, the dynamics of the movement today are not such that I want to play with this too much, but, well, let me do it this way. I'll try and make it as real life as I can so it's not. So if I have a pitchfork on my chart and we've left the bottom and we're heading up, okay, not such a bad pitchfork in a quick example because I've got a tag on my quad and I got a tag on my lower parallel to set this fork. Another little tag here. So what I can do is I'm looking for trades at this point off the median. So just like I can put a horizontal Fibonacci on here and see my levels, I can rotate or put all my INS on and see if anything's anywhere near the pitchfork. Nice line here. That would be a nice energy point. Tagging right there. Got a harmonic target in the median. What about the cam line and the pitchfork? That would be nice. So you have potentiality. So what happens then is price starts moving up here, so I won't be distracted. If this is, if price meanders its way over to like right here, all I'm going to do is take everything else off that's not relevant. That's a harmonic target. So I'm just going to go to the tools and I'm going to take off everything else. My super hypo lines are already going to stay here. Okay, my super clustered lines that have 2 and 3 pivots to them. So I take that off. So now I see where the energy point is, and I'll just watch price come up there. If it just hits the target, remember these are really down targets, but it can be work up. If it hits this, I'm not that interested in it. I'll take it anywhere the median gets hit, but that's a super hit right there. That's really that energy point that you're looking for. Oh, I got to wait for energy points. No, you don't have to. Go buy lottery scratcher tickets. Just trying to tell you how to trade. Trading mastery comes down to one thing when all's said and done. Selectivity. Selectivity affects your head game, it affects your RAS, and it affects your wins. And so you only take trades that are superset criteria. It's the top of the criteria. And you know what? My Lord, you got enough pairs, you got enough pitchforks you can draw, every swing, every direction, you got a pitchfork going. Energy point hits are going to be all over the place. But I'm going to cut this down at this point. So I don't really have anything else to teach on the INS. I'd say put it on your charts. And then Monday, come back with questions. And I'll answer INS questions on Monday. We have a chance to play with it and enjoy it. So it's good stuff. But I like these lines. Watch that 121.39 tomorrow or the rest of the day, depending on where you are. For some of you, it's already morning or afternoon. But watch that 121.39. What do we have this one at? Oh, yeah. So let me show you this. So these are harmonic targets. Remember I said you can do two things in regards to labels and last value. So you would open, go to your gear, go to your your chart settings, brings up this panel, go to scales, and in there you will find indicator last value. So let's look at these harmonic targets and click indicator last value, and it'll paint up and give you the actual number for it. Furthermore, you can actually put indicator labels on and it'll label it on the chart. There it is. INS harmonic target 34, INS harmonic target 21, 55. So you can do that if you want. Brings a little bit more clarity to it. Yes, Telegram group is in the pinned post of the iMarkets Live Scans, Forks, and Fibos group. All right, I'm going to wind it down there. I covered everything I wanted to cover. Hope you have a good rest of the week. And remember, life can be short, so for those people you love and care, please let them know you care and love them. Love you guys for carving out some time being here tonight. Hopefully you got something of value. This is a tremendous, tremendous tool. Don't expect to put it on your charts and to be a brainiac with it. Everything in the Forex takes a little time, but I'm just being honest with you. It's not like it's a sales job. I'm not going to try to sell you something. I'm giving it to you. So I have no reason to be, not be transparent and truthful with you. This will be a major tool for you. It's right under Fibonacci. Pitchforks, Fibonacci, scans, strong support and resistance systems. And the INS is the best one out there. Again, it's been proven over and over. And we've added, subtracted, fixed, and whatnot. So the pool of subsystems we have here right now is the best of the best. Went through that already, so watch the replay. It's covered. I'll do one screenshot for it, and then I'm done, because I've already said goodbye. Where do you get the indicator? So take a screenshot of that. There you go. And just follow the numbers. Open your TradingView charts, open a chart, and there you go. Thanks. Wayne posted the Facebook group again that you want to join to get into that pinned post that has so much data for you. And there you have it. So enjoy yourselves. I'll talk to you guys on Monday.